as we enter a more multipolar world, and I think that we kind of have a long-term sovereign debt crisis in much of the developed world, that I think is going to play out over a longer period of time. I think gold is kind of an interesting hedge in that sense. I think in general, Bitcoin is now a kind of a superior alternative in a lot of ways. And so I'm more active and interested in the Bitcoin space. I do some venture capital work there. I kind of work with some startups, and I provide a lot of research for that space. So I generally prefer that, but I still use gold as a diversifier.
Lyn Alden, a well-known financial analyst and investment strategist, thinks that the constantly shifting geopolitical dynamics will greatly benefit the assets Bitcoin and gold. Alden claims that Bitcoin is the chosen asset of the general public while gold is the favored asset of central banks, in a recent interview with Stansberry Research. According to the well-known analyst, although central banks are stockpiling gold in record amounts, retail investors of all ages are selecting Bitcoin and educating themselves about the many significant attributes of the top digital asset as the world is increasingly turning away from the US currency. Within the next 3 to 5 years, Alden anticipates that there will be another Bitcoin bull market. The investment strategist predicts that the United States will experience a liquidity crisis in the near future, which would surely have an impact on Bitcoin's price. Alden, though, thinks that a lot more investors will migrate into Bitcoin in order to keep appropriately diversified given next year's hobbling event and the ongoing economic difficulties in the United States. Alden believes that in the future, even central banks will switch from holding gold to Bitcoin. Alden's conclusion is that alliances are moving in the world and that the winners will write the narrative for the following age. The BRICS nations and the quickly solidifying coalitions are currently favoring gold and stockpiling the precious metals in record amounts. These nations currently have the upper hand. The long-term use cases for gold, according to analysts, are limited since central banks will eventually start to diversify into Bitcoin, which has much superior fundamentals in the long run. Alden also talks on the growing acceptance of artificial intelligence and how it intersects with cryptocurrency during her chat with Stansberry. We will now present you some excerpts from the incredibly illuminating discussion. Please watch the final videos, follow the channel, and enable post notifications for more content like this.
So, it's been in this decade where it got very over exuberant, about a decade ago. So, if you go back to say roughly the year 2000, gold has roughly kept up or outpaced the S&P 500, which is pretty impressive. But all those gains were during the 2000s decade. So gold went from, under $300 an ounce to nearly $2,000 an ounce. It just crushed almost everything else. And then it's been in this kind of bear market, sideways market for over a decade, and has obviously given up a lot of that advantage. Ever since the global financial crisis, we've seen a shift from central banks where, for a multi-decade period, they were reducing their gold tonnage and investing in things like treasuries instead. And it was like this, this kind of downward move. But then with the global financial crisis, you had like a V-shaped recovery. And you started to have increasing gold tonnage among central banks.
Bitcoin at least keeps up with gold in almost every category you look at, and I think it actually is superior in many of them to gold.
The next 6-12 months are very uncertain because of liquidity issues we discussed before. But when I look out 2 to 3 years, I think it'll have another significant bull cycle. And that's also one of the investments that I think I intend to hold it for over a decade more. I think it's a play that goes on, and there's very few things that I think could change that thesis. But as long as I continue to hold that thesis, I think that's going to be one of the better performing assets out there. And I think there's still a window in the next 3 to 5 years where gold could do well. I think we're in kind of very uncertain times right now. And so the way it's kind of shaping up at the moment is like gold is like central bank money and Bitcoin is like people money, money for the people. And there's still this dynamic where Bitcoin's not really big enough for central banks to at least large central banks to really care about. And so I think there's this window here where gold's interesting, but I do think that Bitcoin is going to be the better performer over most cycles, for at least for investors that can withstand that volatility and that are willing to do time to research it and understand exactly what they own.
The last, obviously, 4 to 6 weeks, it's been in the AI boom. Do you see this as a bubble, or is this something that has legs for many, many years to come?
I think it's real. I think it's gonna be a long-term transformative thing. As you point out, AI has been with us for a while. I mean, the chess programs have been beating the best human
Yeah.
grandmasters for 2 decades or more. And it used to be you need a supercomputer, then you could do it with a desktop, and then now you can do it with a mobile phone. So the amount of the processing has gotten better there. I think that obviously the key thing here is that technology often works in stepwise changes. So people often think of it as like this exponential thing, but usually you hit some sort of breakthrough that opens up this whole new thing. And the example that say Michael Saylor's used, because he's an aerospace engineer, is human flight. So for thousands of years, no progress basically. Then you kind of dabble in balloons for a couple centuries, but really it was not until we could produce both aluminum and hydrocarbons, and that combination in a few decades, then we're in space, right? It's amazing how quickly things took off once you had a couple key pieces come together. Same thing for, electronics. Like once electronics could make a workable smartphone, the amount of innovation that came out over the next decade was incredible. And so I think AI kind of hit a moment where it can now be inserted into far more things, and the pace of innovation can pick up. And so I think to the extent that it's a bubble, I would say that investors should still watch out for valuation. I think they should still have realistic expectations. They should still manage position sizes. And I mean, a good analogy is the dot-com bubble, in the sense that most of the promises of the internet in the 90s were true. I mean, the internet dramatically changed every facet of life. And yet many of those were not good investments for 5, 10, 15 years because they were just extraordinarily overvalued. And it was hard to know which ones were going to be the true winners from that era. So I think that AI is in many ways hyped right now. Stock prices that have like screamed vertical, I think might go through a period where they kind of have to grow into that valuation a little bit. But I think that the long-term trend is clear. And then outside of AI, going back again, I think energy and commodities, after being a terrible investment in the prior decade, are going to be a good investment in this decade. And another thing I ask about AI is, like, I flip the question upside down. So what benefits from AI, but also what won't be disrupted by AI, right? So sometimes investing is a negative sum game, which is you want to make sure that what can damage your thesis. And so I kind of, as I look through portfolio companies, I say what things might face severe headwinds from AI. And I don't think AI is going to negatively impact these energy or commodity or infrastructure markets too much. And the reason for that is that for decades now, humans have overestimated how much technology will change in the hardware realm. So we thought we'd have better space flight by now. We thought we'd have flying cars by now. We thought we'd have robot assistants by now. We tend to overstate that. And it's actually really hard to do all that because it all has to interface with the real world and deal with maintenance and deal with entropy and all that kind of stuff. Whereas we tend to underestimate how much software and electronics are going to change the world, because it's got more of a boundless and frictionless growth potential. And so I think AI is going to be similar to that, where over the next decade it'll radically change a bunch of things about our digital lives and the way we interact with digital products and digital environments, things like that. But I think that we're still going to have a significant need for commodities and energy and infrastructure, and that this is underinvested in. And so I think it's one of those areas that is not going to be heavily disrupted by it. And so I in a lot of ways, I have a barbell approach where I'm always looking for long-term growth stories, whether it's Bitcoin, whether it's some of these software programs that could benefit from AI and become more accessible, that kind of thing. But then on the other side, I'm saying, okay, what is completely left for dead, underinvested in, trading at single-digit price to earnings ratios, but super profitable and going to be with us for a long time. And that's where I'd point towards those energy, commodities, infrastructure type assets. I also think there's an intersection between AI and Bitcoin, in the sense that people have been talking for a while about micropayments or machine-to-machine payments, or human-to-machine payments, or machine-to-human payments. And we're actually seeing really early signs of that. So the existing money system has all sorts of frictions. It has global payment frictions. For people that send payments globally regularly, you run into more frictions than just domestically. You can't really do microtransactions because there's like a minimum threshold for how big payments have to be. Like for example, like payment services will charge like a 30-cent minimum fee, which means sending anything under a couple dollars doesn't really make sense. You can't just pay 25 cents for an article to read online, for example. And with, like, say, Bitcoin, Lightning Network, and other sort of scaling solutions, it opens up real-time micropayments. And because it's open source, it also means that AI can actually use it without anyone's permission, right? And AI doesn't have to go get a bank account. Instead, they can, there's already been cases where creators will give an AI agent a small Lightning balance that they can pay. If they have a task to do and they say, okay, I have to do step 1, 2, 3, 4, 5, 6, and they find out that step 4 is that they could use a certain API, or they need beefier processing that they can rent. They can actually spend that on completing that step of the task. And then you can imagine maybe a couple of years in the future that gets done by accident. Maybe someone says, I need you to do these 10 steps, or I want this outcome. And at one point along the way, the AI realizes that money would be useful to it. And so it either asks and says, well, I'd like some money to go buy this, or it could go out and earn it. There's ways that you can. It's open source. You can spin up a wallet. You could post content on Nostr and get tips, and people don't even know you're an AI. I mean, it's kind of far-fetched, but not really. And so, open source money is inherently just more ready to use for various agents that we automate, including automated, funding. And so I think you could have an environment where there's human to machine payments, there's machine to machine payments, there's machine to human payments. It's just kind of a more part of our automated life, which includes the transfers of monetary value, which is not always between humans. And it doesn't mean, of course, that AI has to be like sapient. I'm not talking about like super sci-fi stuff. I just mean agents that are programmed to do something fairly sophisticated, and that using products or services in a digital way is an important part of their process, and they have basically a budget.
What do you think of Lyn Alden's interview? Please share your thoughts and views in the space provided below. To make sure you don't miss any of our regular uploads, be sure to like this video, subscribe to the channel, and enable post alerts. Thank you for watching.